Two markets are trading today, and they are barely speaking to each other. The companies that make chips are being liquidated. More than $1 trillion has come off their combined value, according to CNBC, and the leveraged semiconductor fund this book watches swung between $112 and $92.50 in a single session. The clearest sign of what is really happening came from South Korea, where SK Hynix reported the best quarter in its history, earning more in 3 months than in all of last year at a 76% operating margin, and the stock fell almost 10% anyway, closing its worst month in 24 years. When a record like that gets sold, the market is not doubting this quarter, it is doubting how long the boom lasts. Meanwhile, Apple set another record high. Alphabet rose almost 0.7%, and Microsoft held its ground. The Federal Reserve announces its decision in 90 minutes, with no economic projections attached, so Chairman Kevin Warsh's press conference carries the whole burden. Microsoft and Meta report after the closing bell. Alphabet is the position, 14 shares bought on Tuesday at $333.04, now trading near $335 for a gain of about $25. It is the strongest of the 4 artificial intelligence giants today, up almost 0.7%, while the chip sector loses $1 trillion. And if it closes here, it books a 6th straight higher close and a recovery of more than 6% from last week's low. Nvidia is at the center of the day's damage, down 2.5% to about $192, a 4th straight losing session and 9.5% below where it traded a week ago. Every one of this system's 3 safety conditions now fails, where only one failed this morning, and the price sits nearly 5% below its long-term trend line. The momentum reading has moved 4 times further from a buy since the opening bell. This morning, Microsoft was the most expensive refusal in this book. Every safety condition passed cleanly, and only tonight's earnings date stood in the way. 3 hours later, the decision made itself. On the latest hourly bar, the momentum line has flipped negative and the faster average has crossed back below the slower one. So the conditions that made it a candidate have closed on their own before the event they were being refused for. Reports tomorrow, Thursday, July 30th, with AWS the focus, the same morning as GDP and PCE. The 3-session 230 to 231 stall I flagged this morning has now broken downward and kept going. 229.34 against a 230.74 close. Session range 227.20 to 230.20. The mechanical picture changed in the worst available way. This morning I wrote that the reclaim leg had effectively already been spent, with close 0.69% above the band. On the 1600 hours, bar price has gone through it, close 227.88 against a 228.587 lower band, minus 0.31% below. Standing exclusion, unchanged, and not close on any measure. 301.57 against a 307.30 close, minus 1.9%. Session range 299.74 to 308.64, giving back the whole of yesterday's bounce. Trend arm is blocked for months rather than days. Lagged close 305.00 against an SMA. 200 of 343.468 is an 11.2% gap, and all 3 gates fail. MACD minus 0.369. Fast SMA 305.389 under slow SMA 305.758.